Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that I'm incredibly passionate about. Turning your everyday habit, like that morning coffee run, into a powerful engine for building wealth. We're calling this the Coffee to Wealth Swap. And trust me, it's a gift. I see so many people falling into the same trap, thinking, I'll start investing when I have more money, or I'll wait until I get that big promotion. But here's the hard truth. Waiting is the most expensive mistake you can make. Every day you wait, you're not just standing still. You're actively losing potential gains thanks to the power of compounding. Time, not timing the market, is your greatest asset. So, how do we flip the script? It starts with a simple but profound mindset shift. One that I learned from the FAMI Save and Learn philosophy. The secret isn't about how much money you start with. It's about how early you start and how consistent you are. This isn't about finding $1 million under your mattress. It's about recognizing the financial power you already hold in your hands every single day. Think about it. That fancy coffee, the afternoon snack, that impulse buy online. We often dismiss these as small, insignificant expenses. But what if I told you that each one of those small purchases represents a seed for your future wealth? Let's break it down with some real numbers. A specialty coffee might cost you, say, $10. If you buy one every workday, that's around $300 a month. Over a year, that's $3,600. Now, imagine, instead of just spending that money, you invested it. By putting that same amount into something like a mutual fund, you're not just saving it, you're buying a tiny piece of some of the biggest, most successful companies out there. Your money is no longer just sitting there, it's actively working for you. 24 septima partes. Earning returns, and then earning returns on those returns. This is the magic of compound interest, what Einstein famously called the eighth wonder of the world, and it works best over long periods. Let's take this a step further. We're not even saying you have to give up your coffee completely. What if you just swapped 3 of those purchases a week for an investment? That's still a significant amount being put to work for your future self. The beauty of micro-investing is that the barrier to entry is incredibly low. You don't need a broker in a suit or a deep understanding of complex financial charts. You just need a plan and the discipline to stick to it. Consistency will always beat luck. Someone who invests a small, fixed amount every month, regardless of whether the market is up or down, will often outperform someone who tries to jump in and out, trying to predict the market's next move. This strategy is called dollar cost averaging, and it's a beginner's best friend. It smooths out your purchase price over time and removes the emotion and guesswork from investing. You're building a habit, just like brushing your teeth or going to the gym. It becomes an automatic part of your financial routine. Now, let's talk about where to put this money. For beginners, mutual funds are a fantastic starting point. A mutual fund is essentially a basket of different stocks, bonds, or other assets, managed by a professional fund manager. This instantly gives you diversification, which is just a fancy way of saying you're not putting all your eggs in one basket. If one company in the fund doesn't do well, it's balanced out by the others. This significantly reduces your risk compared to buying individual stocks. Think of the FAMI Save and Learn approach as your financial education. As you consistently save and invest small amounts, you also learn. You start paying more attention to where your money is going. You become more familiar with financial terms. You gain confidence in your ability to manage your own money and make smart decisions. This knowledge is just as valuable as the money you're accumulating. You're building both financial capital and human capital. This journey transforms you from a passive consumer into an active owner. Every time you invest, you're buying a stake in the economy's growth. You're making your money work as hard as you do. Let's visualize the long-term impact. That $300 a month we talked about. If you invested that consistently for 20 years with an average annual return of, say, 8%, you could have over $72,000. Extend that to 30 years, and it grows to nearly $108,000. That's the staggering power of starting early and staying consistent. Your contributions are only a part of the final sum. The vast majority comes from the growth of your investments over time. This is how you build a future where you have options. The option to retire comfortably, the option to travel, the option to pursue a passion project without worrying about the income. It's about creating financial freedom, one small investment at a time. So, what are the practical first steps? First, find an amount you are comfortable with. Start small. It could be $100, $1,000, whatever works for you. The key is to start. Second, automate it. Set up an automatic transfer from your bank account to your investment account every payday. This removes the temptation to spend it and ensures you stay consistent, out of sight, out of mind, and into your future. Third, choose your investment. Look into reputable companies offering mutual funds. Do a little research on their different fund options. They often have funds tailored to different risk appetites, from conservative to aggressive. A balanced or index fund is usually a great place for a beginner to start. Don't get overwhelmed by choice. The most important decision is simply to begin. You can always adjust your strategy as you learn and grow more confident. The goal for your first year isn't to become a millionaire. It's to build the unbreakable habit of investing. Celebrate the small wins. Celebrate your first investment, your first month of consistency, your first year of being an investor. You are fundamentally changing your financial destiny. You're taking control and actively designing the life you want to live in the future. Remember the Coffee to Wealth swap. Every time you face a small discretionary spending choice, ask yourself, does this serve my present self or my future self? More often than not, you'll find that investing in your future provides a satisfaction that no cup of coffee ever could. This journey is a marathon, not a sprint. There will be market fluctuations. That's normal. The key is to stay the course and trust your long-term strategy. Don't panic and sell when the market is down. In fact, for a long-term investor, a market dip is a buying opportunity. It's like your favorite stocks are on sale. This discipline is what separates successful investors from everyone else. It's about mindset and behavior, not about being a financial genius. So I challenge you today. Look at your expenses from the last week. Identify one or two things you can swap. Make a commitment to start your save and learn journey right now. Open that investment account. Schedule that first transfer. Take that first powerful step. Thank you so much for watching. If this video inspired you to start your own Coffee to Wealth swap, hit that like button and let me know in the comments what your first micro investment goal is. And don't forget to subscribe for more tips on building wealth and achieving financial freedom. We're in this together. See you in the next video.